I'd like to welcome everybody to one of our most popular events in recent months. My name is Deb Baxley, and I'm one of the co-founders and officer. I'm the CFO of NYPAY, and I warmly welcome you all. First of all, I'd like to thank Davis Wright Tremaine for the use of this beautiful facility. We're having quite a few of our events here, and it's just such a great location and a beautiful room, so thank you so much. And before we get started, I just want to remind you of our next event, which is Tuesday, May 3rd, and it's EMV. It's 8 months after adoption, and we've got 2 or 3 really exciting panelists so far. We've got a grocery store owner who's been hit with a lot of chargebacks. We have Randy Vanderhoof, who's the director of EMV Migration Forum, and we'll most likely have a bank and a network as well. So that should be a pretty lively discussion. Before I turn it over to my colleague here, Christiane, I just wanted to remind you can see all the cameras. We're webcasting tonight's panel discussion, and I'd like to welcome our webcast viewers. If you want to ask any questions or interact with any of the webcast viewers, please post to Twitter using the hashtag NYPAY, NYPAY, rather than using the webinar control panel chat, and we'll be monitoring that. At the completion of tonight's webcast, those of you on the webcast will be asked to complete a short survey. So complete the survey to help us plan for future webcasts. Okay, Christiane has a few words.
Thank you. I'm Christiane Gennaro. I've been involved with NYPAY for a little while. I also want to thank, besides Davis Wright Tremaine, for sponsoring the space. I want to thank Opus Consulting, who is also one of our sponsors of the event tonight. They provide technology solutions and services in the retail payment domain with the payments products we call Electra Card, which has been available for 15 years. They pride itself on being a niche player and really focusing on platform transformation. So I really want to thank you very much for sponsoring the event and also for all of you turning out tonight. I'm going to hand it over to Eric Pacini. Will you introduce yourself? Eric has been really instrumental in organizing tonight's panel. He is with Deloitte in the blockchain practice, and I will turn it over to you.
Thank you. I guess we need to talk into those mics for the webcast. So I'll do this. So thank you for being here. We have an amazing panel. I truly believe that. I think we have very unique, different perspectives tonight, and you're going to enjoy the discussion. I've done a panel similar to this a year ago. The group was about the same size, and I know you're not shy, and so I know you're going to ask a lot of questions. We're going to have a lot of time to do that at the end. I'm going to try to go through my own questions first, and we'll go through your questions next. I'll try.
That's kind of a challenge for this group.
I'll try.
Be kind.
Setting the expectations. My name is Eric Pacini. I'm a partner with Deloitte. I've been with Deloitte for 10 years in our payment practice. I do a lot of work around digital payment, digital banking, and in the last 2 years I've been leading the blockchain march within the firm globally. So a lot of work, as you can imagine. And I'm going to let the panelists introduce themselves. And when you introduce yourself, if you can tell us the name of the company, of course, what you do, and what is the most significant project or activity you're working on today as of right now? So Tiffany, you're first.
Okay, I'll go first. Hold this to my face. Hi, I'm Tiffany Wan. I'm a vice president in our payment strategy group at JP Morgan Chase. The payment strategy group, just to give you a little bit of background, it's basically functions like an in-house consulting group. It sits in the corporate sector of the bank, and we work with all the different lines of business within the bank that are related to payments, so both wholesale and retail, as well as our merchant acquire commerce solutions. And probably the most significant thing I've been working on related to blockchain is actually a payments proof of concept, so I'm sure there will be many questions about that once we get the panel started.
Hi, everyone. My name is Kathleen Bright. I'm a senior strategy associate at R3. R3 runs a consortium of 42 banks, which are looking to adopt distributed ledger technology for enterprise scale endeavors. The most interesting thing that we're working on in general is our Corda solution, which we announced this past Tuesday from our CTO, Richard Brown. So I'm sort of helping out with trying to figure out what's good for Corda, what's bad for Corda, and working to make that a great open source solution for everyone.
Hi, I'm Steve Mullenkep, and I work for Ripple. I'm the head of channel sales at Ripple, which means that I work with our partners like Deloitte. And I did want to thank Deloitte and NYPAY for bringing us in here. I met some of you when I came in. It seems like a lot of deep payment experts, so be kind to me. I'm not a payments expert. I'm a partner expert. But I will tell you a little bit about Ripple. So Ripple is three things. It's a company that is called Ripple, and we're a Silicon Valley-based, very technology-focused company. We also have the second largest blockchain ledger after Bitcoin blockchain. So that's the other thing about Ripple that when they hear the name. And the third thing is we're a technology company developing tools on top of the blockchain. So we've built a product called Ripple Connect, which we sell to banks, and they use that to do real-time cross-border payments. So that's Ripple in a nutshell.
Thank you.
Hello, I'm Jim Robinson from RRE Ventures. I'm a venture capitalist based here in New York. We invest in lots of different kinds of companies, but about a fifth of what we do is in and around financial services and financial technology. We have a history within digital currencies broadly writ going back nearly 20 years in terms of looking at some of the earlier forebears of what we see today. But we've only started to invest really over the last 3 or so years, and we've made about a dozen investments. And about half of those are on the blockchain side of the ledger, meaning enterprise-based and typical blocking and tackling and solutions ideas for large FIs. And the other half range from still pretty conservative to fairly shallow end of the pool in terms of the spectrum, Bitcoin and related some other currencies. Companies like Chain, like Gem, like Itbit, like Ripple, those are some of the ones that we're investors in, but there are many others as well.
And Jim, maybe you can tell us a little bit more about Abra, because I think that's very specific to the audience here.
Sure. So I'm a co-founder of a company called Abra, which is my second attempt at the international remittance business in an electronic format, but the first one using a blockchain topology. At the moment, things would settle on the blockchain through Bitcoin, but actually we're looking at Ether and a bunch of others, and we don't really care. What we want is functionality. But it's, as you would expect, the ability to basically send via a very short message payment. Now, we did this in Venmo, also one of our companies. We were founding seed investors in that. Abra is coming soon. I mean, we're in beta now and hoping to launch soon, starting really with some countries in Asia, where you see high remittance handles, and then obviously coming into Latin America and so forth.
I have the application on my phone. I'm just checking every week to see when are you going to do it.
Are you a teller for us? Or
I want to. So how many of you have Bitcoin? How many of you have Bitcoin? Or any other cryptocurrency? How many of you have a good understanding of what blockchain is? Half of the room. Maybe we start with that. I know we didn't prepare for that question, but I just realized maybe we need to bring everybody up. And Tiffany, maybe I can ask you, because Tiffany was with us at Deloitte, and she actually started a lot of what we do today 2 years ago now. Can you give us kind of an idea of Bitcoin, blockchain, kind of the big definitions?
Sure, I'll start, and then others can obviously jump in and add on as well. But I think the biggest distinction to probably make is between Bitcoin, which you hear a lot about in the news, Bitcoin the currency, so that's the stuff that everyone's talking about, the price fluctuating, any money laundering issues, it gets a lot of the media attention, versus blockchain, the technology that underlies that currency. And so what I think most of the folks on this panel are really focused on is how to use the blockchain, the underlying technology, which essentially is like an immutable real-time accounting ledger, if that's probably the easiest way to think about it, to move money and facilitate payments. Obviously, a couple of the other folks on this panel probably are using this technology for other use cases, like ownership of securities and assets, but I think this panel is going to probably go deep on payments.
Anything else?
Yeah, I'll just for a formal definition, a blockchain is a way to implement a distributed ledger. A distributed ledger is a record of consensus with a cryptographic audit trail, which is maintained and validated by several separate nodes. So you can think of it. I know, right? It's very intense. And so what I like about this definition is like, yeah. So what I like about this definition is it kind of touches on all the different things that people find attractive about blockchain. So we talk about it validates transactions. Well, it looks and can dynamically assess something without you having to use a third party to do it. The ledger itself is able to verify certain parameters. It's auditable, so you get to have clear transparency into how something came to pass. And you have a great, reliable trail of that, which sits among many different people, so you can solve some political problems by having the ledger shared amongst many different folks. In Bitcoin, this is used to track the native cryptocurrency, but in capital markets, people want to use it to do things that right now banks do over the course of many different systems, which need to be reconciled overnight, which is very costly and presents a lot of different risks to the bank.
Yeah, no, the only thing that I would add is that many people, their first exposure to blockchain was Bitcoin blockchain, and it gets imprinted in their brain. It's very important to understand that there are different ways to solve the same problem, and there's ways, as we said, to take apart the blockchain and use it for different reasons. So don't get too immersed in terms of how Bitcoin blockchain works. You have to be really open to the various uses we'll see in the future.
Good. So when we think about payments, we think about a lot of different use cases. You have micropayments, you have B2B, you have B2C, you have ACHs, you have cross-border payments.
Yep.
Where do you think the biggest disruption is going to come from the blockchain point of view? Where do you think that's going to come from? Maybe Jim, you can start.
Well, so the way I look at that is I divide it in a couple of ways. One is enterprise versus consumer, and the other is first world use case versus second and even third world use cases, because they vary a great deal. And obviously anything that's intramural within any of those categories adds a layer of complexity. Consumer demand will drive some of this, and we saw that in Venmo and other apps that do that, and we'll see that here too. Obviously, there are regulatory and other hurdles, and the complexity is increased geometrically because you've got to solve for multiple countries, maybe even within the country, multiple states, and so forth. So that's one part of it. My best guess today is that the earliest cases that will be large and written about and adopted beyond just POC are going to be banks working, NFIs, not just banks, transferring and accounting for things amongst themselves. First in consortia or groups of banks, maybe it's 3 at first and then it's 10 or however many trading this or that or the other thing. And I think it'll go from there. And those use cases, if they're solid, which I suspect they will be, that's when you'll see adoption at that level.
Steve, any reactions?
Yeah, so just in terms of just to give you Ripple's story. So we're technologists, and we had a technology that we wanted to apply in the market. And we went around and we spent 3 years, wandering the desert, looking at different ways to use this. And we talked to credit card companies and Starbucks and others in terms of how we could put their points on the blockchain. But we actually hit on cross-border payments. And that's because we talked to a lot of banks and they said, well, this is a pain point for us. It takes 4 days sometimes to move money. It's not transparent. We have a lot increasing regulatory requirements. So we found an area that nobody really likes, very much. It's a problem point for the companies, for the banks, and for their customers, including retail and corporate. So that's how we kind of found our place, and it's playing out. So we've got a lot of interest. In fact, we announced our product at Sibos, and the banks are coming to us. And this is the first time that I've been in a selling role where I didn't have to knock on the door. So there's clearly a lot of interest, and it's a pain point that a lot of banks want to solve.
Continue.
Well, I think disruption can be good for incumbents or it can be bad. I'm thinking of the oil industry really benefited from new forms of extraction. ExxonMobil hasn't gone away though. And yet, at the same time, brick and mortar retailers have kind of been cast aside in the age of internet and e-commerce. So I think disruption is really what you make of it. And at R3, we're trying to usher in a way to have costs saved by the bank and to increase the efficiency of back office processes, middle office processes, and the sell side. So we're trying to work from that angle. But naturally, there's going to be some areas, such as capital controls, where cryptocurrencies sort of take hold and provide a very robust alternative. So I think it's a narrative that we're going to see play out over the next 5 years, but it could take a lot of different forms if we look at history.
Tiffany, anything else?
No, I was just going to say, I think Steve really hit on it, which is if you're looking for an area in payments that's ripe for disruption, you need to look at an area where there's an actual pain point that needs to be addressed. So a lot of the blockchain use cases that are often thrown out, they can seem like a solution in search of a problem. There's this really cool technology, let's just go use it because it's here and it's really, really cool, as opposed to thinking carefully about, okay, there's a very specific problem that needs to be addressed. Maybe there is no digital or incumbent solution in place today, and blockchain is the best solution for that. I think if you think about those areas of payments, those are probably the ones that will be ripe for disruption, and maybe you'll get a killer app in there.
So I think it's interesting because what you said is you're actually working for the bank or with the bank, which are the incumbents, to bring that technology to life. But no one on the panel said someone else is going to come from outside and disrupt, which is kind of the title of the panel today, right?
We actually
and actually disrupt that. So
we started as a disruptor, and FinCEN came in and said we couldn't do what we were doing. So we learned the hard way. So we found that maybe we should let banks do what they do.
So what about coming from maybe a different country, right? Because sometimes innovation will come from a country where the regulation is not as strong, and then arrive in the US. What's your take, Jim, maybe with your global perspective?
So, it depends on the regulatory framework, and no matter what you do anywhere else, you still have to, if you're going to come here, you don't have to, but over time, if you want to have lasting value, you're probably going to have to find a way to work within the extant laws here. I agree that it can be overused and overprescribed, and that's actually, as you look at sort of waves of technology and as they're adopted, they always challenge incumbents, and incumbents always have the same reaction, which is that they pull back, they go through the 5 stages of grief, they start to put money into it. One of my measurements, by the way, is rooms like this. So about a year ago, I was at a conference where my guess was about $100 million worth of just HR costs in the room. I was at a conference a week ago where I would guess there was about $250 million in HR costs. But one of the things that I've learned over 20-some odd years as a venture investor is it's great to back the disruptors, the transformers, the people with new technology. Sometimes they come from overseas. Often the R&D or some aspect of the technology does. When it's all said and done, it's very hard to trump the staying power of brand and balance sheet. Incumbents generally win eventually. It can take a while, they can be bloody, they are certainly forever changed. And think of all the technologies that you can think about over the last 15 to 20 years, 30 years. Every one of those has had that exact same curve. This won't be any different. I mean, brands, Chase, Citi, name your brand, are unlikely to perish. They're much more likely to benefit greatly. There will be disruption, there will be cost, there will be pain, there will be some workforce transformation that will have to be gone through. There are difficult aspects to these things, but they will be a better, more efficient institution for it. And hopefully I'll make a bunch of money selling them the companies. But me or someone like me, if not us.
So when we think payments, we think disrupting the incumbents, but we have a lot of risk and challenges to change a payment ecosystem, right? It could be security, it could be compliance. What do you think would be the main challenge for you as individual companies to actually disrupt? What are you facing every day that is making your life harder to actually disrupt?
Okay. I think, putting aside the regulatory challenges and the unclear environment around this new technology, I think one of the biggest challenges for us is that payments doesn't sit in a vacuum. Like the movement of money is just one small piece of the payments ecosystem. So if we're going to disrupt that piece of the payments ecosystem with this new technology, it still needs to integrate into all the other fun upstream things and all the other fun downstream things that are part of payments. And I think figuring out that piece and doing it well, doing it right, making sure it's not incredibly expensive and doesn't require a lot of labor, that's one of the biggest challenges that we're seeing.
I would say the scope of our ambitions is probably the hardest thing that we have to grapple with right now. So blockchain technology incorporates a lot of different disciplines. Obviously, there's cryptography, computer science, how IT systems work, all these, sort of things that you might think of a financial technology. But there's also like economics. There's also, how does money work? What is debt? And I think there's a lot of open-ended questions that we're only yet to explore as we get into like different pilot phases and the like, that we're just going to have to find out the hard way. I think that's what's going to be really more difficult than anything else. The regulators have been like actually quite responsive to this whole space, which has been fantastic.
Mm-hmm. Steve?
Yeah, so I'll just maybe give some real life examples of where we stumble or where when we talk to banks, things break down. So we did a pilot at one of our target banks with real time from the payment mechanism, real time across the border. And then there's a batch system on the other side that does the processing. So what we want to have is, a customer experience where I want to pay mom in another country because she needs to buy medicine today, but the batch systems are still not running. And I did the same, had a similar discussion with at a bank. And so when do we run fraud? We have to do our fraud checks, and you're doing real-time payments. Our processes can't adjust like that. So it's really going into rethinking the processes, rethinking the core systems, and then even rethinking the model. So what happens where? Does the bank do the processing, or does the processing take place at the endpoints, at the customer point? So we did, for example, have the customer, before they even send the payment to the bank, they check to see whether that is a valid account at the other bank. Mm-hmm. So that's happening not within the bank, not in the middle of some SWIFT mechanism, but way before, when I'm making the payment out or deciding to make a payment, I can pre-check. So we move processes around as well.
Jim, any additional thoughts about this? Challenges?
There are a lot of challenges. It comes back to a point I think that was made before, which is we can come up with 20 use cases just within payments that may or may not be worked on somewhere. But blockchains are really just slow, decentralized databases in and of themselves. So you need that immutability. You need the write once, look up forever. These are things that you need to have. Otherwise, it's kind of pointless. It would be far better just staying with Oracle 9. It really doesn't make sense to do, depending on what you're solving for. Trading systems, et cetera. Settlements matter a lot. So SWIFT and a lot of these other things you're going to see because they wring costs out of the system for banks that are already trusted partners. And that's the other piece that we should touch on, is the notion of trust versus trustless. These are bespoke systems that are being talked about that will be trusted parties. So people have opted in, and hopefully you haven't had an adverse selection problem. And so you've got a limited number of partners. You know them. You do a lot of business today. What will happen there is the same thing that happened with intranets inside organizations, which is, okay, so far so good. Let's expand the border a little bit more. Didn't break too much China. We'll expand it a little bit more to allow more in. That's going to be the process that's going to happen here. So, if it's SWIFT, for instance, it may be, 8 banks, 10, then maybe it's 12, and then maybe it's 15, and then it's 25, and before long, everybody in every bank everywhere is saying, well, we've got to be a part of this link, of this network. These are all network effect businesses, so that's the main benefit to them.
Okay. So I want to go back to the title of the event, right? So when I think about disruption, I think about Kodak, I think about Blockbuster, I think about those guys, right?
Yeah.
So who is going to be the blockbuster of payment because of blockchain?
Blockbuster, did you say?
Yeah.
Who are they?
Netflix.
Oh,
No, I know what you
Netflix
mean.
of
Yeah, I think so.
Netflix here.
Be more
Netflix are here.
positive.
Okay, so who will be disrupted?
Who will be the main, and it doesn't have to be a company, right? It could be a group
Well,
of, risk manager and banks,
Yeah.
kind of thing, right?
What I think is there'll be a reshuffling of the players. So right now, let's say cross-border payments are our area. There's 7 banks that are almost an oligopoly. Well, it doesn't have to be that way. So it's a democratization of payments that a small bank can make the same type of payment that a large bank can do. So a small bank in China can send money to a small bank in Canada without the big banks in between. But what do the big banks do? Well, they provide liquidity. So the big banks might have a different role than they currently have. Your card, you use your card one way, your credit card, but it might be used in a different way. If we could connect all the debit cards around the world real time, I can send, again, payments real time from my bank account to your bank account. So it's not so much a disruption, maybe the same players, but the players have very different roles.
Yeah, I like that. Yeah. Any idea? Anyone else?
No, I couldn't have answered it better myself.
Okay,
So.
good. Jim, any?
No, I think asked and answered.
You have too many investments in too many companies to mention one name. Maybe we open up for questions because you guys have been very quiet, which is unusual.
I've
So,
been trying.
oh, you've been trying. See, that's why I'm
trying
feeling
to
this
disrupt
way.
your panel,
All right.
but it hasn't worked.
Go ahead.
So how do I evaluate which platform is better? Because it's almost sounding like whatever blockchain platform I use, it's a commodity. It doesn't matter, it's distributed, it's cryptographic, this blah, blah, blah. But, it's really how I use it. But how do I evaluate which underlying platform is better?
You can
Go
take
ahead.
a crack at it.
I think a piece of it needs to be driven by the use case itself. One of the things that blockchain, people were very excited about the technology in general was the ability to create trust in a trustless system. But if you're looking at a use case where maybe there's only 2 or 3 players or maybe only 10 players and you know who's on the other side, the threshold of trust that you need might be a little bit lower because hey, I'm Chase, I know it's Bank of America over there, I'm good with them, we don't need to go through this whole verification process and consensus building to verify transactions. So that's one piece. And then the other thing is, like any system, one of the things you probably have to think about is throughput. So the different technologies that are out there have different abilities to scale. And there's been a lot of news lately about the Bitcoin blockchain and the problems with that in terms of scalability and throughput. But that's another thing that you could think about. There's probably a really long list. I'll stop there and let somebody else talk.
Yeah, I think in decentralized systems broadly, you have a big tension between scalability, size, and security. And there's trade-offs associated with everything, of course. Bitcoin is optimized for one goal, and that's to resist government censorship. It employs proof of work. It employs anonymous consensus. And that comes at a cost. As we've seen with the block size debate, there's a throughput issue with Bitcoin that is very much ingrained in the design. And that's fine because Bitcoin was meant to serve a purpose, and it does that purpose quite well. When applying that to a capital market solution, you might want something that's centralized, in which case you'd get different benefits and you'd have different trade-offs, but you might not have something that looks like Bitcoin because it's not for the same purpose. Mm-hmm. So it's very much, again, in the eye of the beholder, it's what you make of it.
Steve, is Ripple platform the same as anyone else? As everyone
No, they're all quite big. She's right. They're all quite different. And how do you want to apply it? And it's almost, if you spend a lot of time trying to choose, you might be wasting your time because this technology is evolving so fast that what you have to do is actually design around that. So think about your phone network, the 1G network versus the 2G network versus the 3G. Just assume that things are going to get better over time and then build an application on top of the network that you can migrate over time.
So then basically, though, kind of what I'm hearing is, okay, there's some differences, but essentially a commodity, because whatever innovation or improvement that you're going to get with one, you're going to get with somebody else. So maybe, who's the better partner, quote unquote. But it doesn't seem like there's a strong feeling that any of the platform providers actually has something better than anyone else.
Yeah, well, that's the journey we went through. So we went out and said, here's our great platform. And people looked at it and said, well, I need more than a platform. So I need software support. Oh, okay, well, we'll put software support. I need, future releases. So we've gone through that journey of going from it's a technology, play around with it, to building a enterprise software company and providing everything else. We need when something goes wrong, we need someone we can call and yell at. So it's very hard to call the Bitcoin blockchain and say, hey, it's not working today. So that's, what banks, what credit card companies need is they need more than just the technology.
Yeah, that's a good one. Yeah, Jim?
So I agree with most of this. I look at it slightly differently from my perspective, which is not surprising. To me, it comes down to brands, which I would put under the heading of, they're all going to be relatively the same. They'll one-up each other on a quarter to 2 quarter basis. But for the most part, things will normalize. If you've got something, if you have another one of these features, then if folks like it, the other ones are going to ramp to that. Then I think, though, beyond brand, and brand means balance sheet, it means ability to do all the service and the support and the updates and make sure you've got tech teams that are able to live up to all that and not break any china on the way, because when we're talking financial transactions, it's different than anything else in the world. You can't break China. But so there's another lens I look through, which is the single points of failure. And this gets into the centralized versus decentralized. Both have their merits. Both are important. There are times when you want to make centralized decisions. The fact is, occasionally I wish our government here would make slightly more centralized decisions. There are moments in time, few of them, but a few, where I wish that were the case. But that creates an attack vector, right? So the minute you do that, you've got a whole series of security risks that you didn't have as much of before, sort of by definition with a self-sealed network, right? So that is going to be a problem. So trust matters. So brand. These are all elements that we trust. You go downstairs and you go to your bank or you go to the food restaurant, you trust the brand, you know the brand, you trust the security of it. Those factors are not going to be any different here. They're going to be just as important. I don't think it's buy on cheapest. Not when you're regulated and dealing with money. This isn't like, do I do AWS or Microsoft Cloud or my own data center cloud? This isn't that kind of a decision.
Questions? Yep.
Is there a common denominator for either the opportunities or the pain points, so that we could kind of predict or understand what future use cases there could be for blockchain? Is there some way to say, well, most of the things that this is good at are the following, and therefore it would be a good use case?
So one of my favorite use cases, I learned when I sat down about maybe a year and a half ago now, with New York's state AG. And, at the time he was in the press a lot, fighting with the Airbnb stuff, and there were some others that were, headline worthy. Now, of course, it's the, the gambling, the FanDuels of the world that he's in the headlines for. But you know what he said his biggest problem was on a day-to-day basis in terms of staffing and just cost and attention? 200 people a week in New York State calling in saying, where's my damn house title? I don't have it. The bank doesn't have it. I don't know where it is. How do I find it? Now, we don't think about this, right? But here's a crystal clear first world example, non-payments related, although it could hook into that. But of, simplification of a ridiculously onerous process, that lots of costs. I mean, you're basically, establishing provenance on who owned it before and all the data around that, and then you've got the transferability of it. So here's, a state AG in one of the largest states in the country spending a big portion of his budget and his people spending a lot of their cycles on an issue that could be solved very, very nicely with the blockchain technology. Now, there are a lot of payments and other financial services that you can think of that attach to that could also be incorporated. But that's a great use case. That's a first world use case. Obviously, there are others.
Yeah, it goes back to the pain points that Tiffany you were mentioning, right? Make sure you identify critical pain points before you actually initiate. Any other advice about criteria to select a use case? Maybe Kathleen, because you've done it's your job actually to do that at R3, right?
Yes. So what are blockchains specifically good at? They're specifically good at forging consensus, tracking assets, creating reliable databases. So by virtue of the fact that they evaluate everything that's submitted to them dynamically, that they can create some good parameters for what you've entered into the database. Though a centralized database would also do that quite adequately if you specified it well enough, but people like to use blockchain for it. Okay, fine. And with those things in mind, you can do things like unite a market. You can do things like take a very politically tense situation, such as a group of banking competitors, and create a ledger that they can all rely on. So there's a number of different things you can do once you have something that everyone gets to see and everyone can validate the validation scheme of.
No, I was going to say, I think she's right. The pain point is where we're doing a lot of reconciliation, because I don't know, we could do a raise of hands, who loves doing reconciliation, but that's a pain point, So that's, blockchain solves reconciliation issues. Where speed is a problem, well, the blockchain can make us move, money or securities or other things very quickly, and then where ownership is questionable. So blockchain solves that problem. So it's really looking for where there's high cost areas and can be where there's high criminality. So, criminality is, reflects where the ownership is questionable and you can't really tell if there's fraud or not fraud. So we find areas where there's lots of fraud, lots of money being lost or money being stolen, or, ownership is questionable, and that's where the blockchain can solve.
One use case that kind of ties all those themes together is this company Everledger, which is trying to sort of track the diamond market in a very dynamic fashion. So this, a traditional database would just say enter, diamond name, so on and so forth. But with this, you get a sense of count, meaning you can actually say, oh, geez, what was the provenance of this diamond? And you can look into the transaction record to see how it came to pass. So a blockchain can do that quite passively, rather dynamically, which is why, aside from capital markets, which of course is my hobby horse, that's a good non-capital markets use case.
Tiffany, you good? Okay. Another question here. Sorry.
I had a question. How do you think the role of banks would evolve with blockchain in future? Do you have any take on that?
I think, again, there will be a shuffling of banks. I think banks will provide.
Yes, the question is, what is the future of banks in this blockchain ecosystem?
Yeah, so that's the evolution I think we're going to see, is that banks can start doing different things than they've traditionally done. They can start becoming, so I was talking to Eric about this, is that a small bank in Norway can become the global bank for all the fishing industry, because they can own and develop an expertise in a particular industry and manage the payments for that one area. A bank in the South can start being the bank for the automotive industry, because there's a lot of manufacturing for automotive, and become experts in supply chain finance. So I think the banks will start specializing in different areas based upon the industry or the location.
So there's great risk in this, and also great opportunity. The risk is that we have further consolidation around banks around the world. There is a risk. Your model is one of actually restoration of power to smaller banks competing, and that's absolutely the case. That is one path we can go down. But another path, which is the risk path, and has to do with lobbying and a lot of other things that can change the playing field, is one where you get such centralization. You can also get that if your system that you're really administering and maintaining the centralized state over is sort of the largest one and the one that all the other banks trust. So there are, new problems, new opportunities, I guess is the way I look at it. And we change the field by regulatory and by lobbying aspects of it. Money obviously can change the field. Banks themselves aren't going anywhere. I mean, banks all have the same ionic columns from 2,000 years ago, and there's a reason why, right? Survivability, they last. We trust them. We may like to say and complain in rooms, damn those people at Chase or Citi or B of A, but you know what? That's where we keep all of our money, right? So they're not going anywhere. They will absorb technologies that make sense. There will be other ways to do it. I'm in a number of lending businesses, and we compete with banks, but we also partner with them in the same company. So, you can kind of sort of have both at once. Where I worry is the centralization piece of it and the risk of consolidation.
Questions? Well, we have a bunch of questions. Yes.
How does, the capital markets question, how does the shared ledger integrate with the rest of the firm? Where does that ledger sit on which side of the firewall? How does one's back office dump into the ledger, without, ledgers serve purposes within the financial institution too, beyond simply the community. So how does this is one of the things I'm wrestling with. What's your take?
It's one of the things we're wrestling with. That's why we have a lab which tries to look at exactly that. We talk to a lot of different stakeholders, and we have assumptions that we go in with, right? But oftentimes they have to be tested against people who've been doing this type of work for 20 plus years. So, I wish I had a better answer for you. I don't mean to sidestep it, but it very much is the case that sometimes we go in and we think that this type of key management solution would be a natural fit. But then we find out that, actually the reason that it's, not the case this way is because of regulation XYZ. How are we to know this? I think our intuition is that this is the right technology to help bring a lot of transparency and coherency to the accounting systems in banks. But the actual mechanics of it is yet to be explored. So I think we have to bear that in mind whenever we make conjecture about how blockchain is, the new big thing.
Yeah, question here.
So you say more about throughput and scalability. If we were to find a solution to base SWIFT and daily volumes and number of network nodes on blockchain, my guess is it would require a redesign of any of the existing platforms. And I can't imagine MasterCard and their volumes and transactions and nodes. So, you're just assuming the solutions will come, or do you have some ideas on how you're going to get there?
So the question is about scalability and performance of the platform to support a large volume of payments.
Yep. Yeah, it's a great question because that is one of the stumbling blocks that happen with Bitcoin blockchain. They can't process enough transactions for us to do large scale processing. So part of the thing is to assume that this won't all happen on one big gigantic blockchain that connects the whole world. So just assume that there will be a series of very different blockchains supporting different use cases. And even the MasterCard may say the same, right? They may continue to do the same system, maybe improved a little bit with blockchain, but the idea is actually to connect all those very quickly. So part of this exercise is to find a better way to connect the various systems. And that's one way to improve scalability. So just take the problem and scale it out that way. The other is around trust. So I don't actually need a global blockchain. When I trust you and you trust me, we only need a tiny little blockchain between us, right? We're just an escrow between the two of us. So there's different ways to attack the problem. And I think we'll see that scalability and problem be addressed.
Anything else?
Go ahead.
You're very quiet.
Well,
Question. All the way in the back, giving some love in the back. Yes, stand up. Yes, you. Yep. Yep.
You talked about the decentralized ledger, how there's a certain level of trust. But I also heard Steve mention there can be fraud within that system. Can you explain that a little more, and especially with cross-border remittances, how that can occur?
So in terms,
can you repeat the question?
So the question was, there's an element of trust in a blockchain, but there's also an ability to commit fraud on the blockchain. So that's why it's a joint solutioning between the blockchain company, the regulators, and the banks to figure out how do we solve that problem. In some cases, fraud checks have to be incorporated in the solution. So the simple example, I can move money real time. Once it's moved, it's moved. So I send the money to Korea. The person picks up the money and then they move the money to another location. It's moved real time. You can't get it back. And this happens also if I hand Eric $1,000 and he, I meant to hand him 100. It's gone. So you have to start moving your especially Eric. But that happens, in today's world, right? So you actually have to think about, how am I going to put fraud checks into my process? How do I slow down the system? So how do I slow down the system to incorporate those things? And that's building in that process. So my simple example is when cars first came out, there was no need for speed limits because they didn't go that fast. But then the cars got faster and faster and faster, and we had to build traffic rules and regulations and other things and build that into the system.
Interesting. Yeah, question here.
On the same token, in terms of trust, what about KYC? If you're moving money from person A to person B to person C across borders, there's no global KYC process. So is there potential for a disruption in some sort of national global KYC process?
We are laughing because that's a very common question we get on the topic. Yeah. So
Yeah, so I'm in a couple of companies that touch on aspects of that, and one that's directly dealing with this notional issue. No, there's not going to be any sort of global KYC.com anytime soon that a bunch of actors from different geographic locations will trust. Whether there should be or not, there's not going to be. And rules can and do vary from place to place. It's one of the reasons why, and again, the use cases matter, but if it's a remittance business, right, and let's call it relatively low amounts or small amounts of money, $100, $200, or $700, or $28, whatever those numbers are, if they're sort of manageable, it is very much, as you said, it's cash. I send $10 to you in the Philippines, in Manila. If I got your address wrong, well, you just got $10 that you weren't expecting. That's sort of true, right, today in cash. So there, you're not relying on KYC, and because the amounts that we said in the beginning are relatively small, you can make the case that these are not, they're certainly not on the radar screen of FinCEN and of the typical regulators relative to the larger transactions, which is what they're really looking for. If you want to send a large amount, then you're going to want to have a trusted counterparty that has some sort of KYC, and most major countries have something in place that you're tapping into, and it's kind of the best you can do, whether or not it's better than or worse than what we do here. I'm just using the U.S. as a sending country. You will get some leeway on that as long as you've tapped into the systems that they're using. It's not absolute. You don't have a free pass. They may decide later they didn't like it, but in fact you're trying to comply, and that's really what they're looking for. And again, they're focused more on bigger amounts of money, 500,000, 1,500, whatever it is, 5,000, et cetera, et cetera. So use cases matter a lot. But this is a problem that we have today too, right? And this is one of the reasons why we have so many rejects that happen in the system and false positives. You experience this here at home with the cards in your wallet. That's hard to get away from as long as you've got centralized stacks. And so one of the great, we've talked about the blockchain, and the blockchain has lots of utility in big iron and enterprise, but it also has a lot of utility for individuals. It's really like cash, only you're not subject to the local cash. If you were sitting in Argentina right now, having lost 5% of the value in 2 years of your peso, of course, those that have wealth there haven't been in country in years, so who gets hurt, or those that don't have the access or ability. So this, there are advantages to that, and you don't even want a KY system in that particular equation because that defeats the purpose of that system. So, use cases matter, I guess.
And just to add, I mean, your question about what does the role of banks, how does that transform? That can be one future role of banks, is they are the authenticator of the transaction. They maybe hold my, fingerprint, my eye, information. That they start becoming the source of trust, and they hold that private information very tightly.
Yeah, if you don't like 8 digits and a special character and a capital and a number, you're really not going to like 10 or 12. And this is actually, I would argue, even a near-term solution to most of the password problem that we've got.
And would the settlement piece would also reside with the banks, or would blockchain take away the settlement piece from the banks?
Well, so our model is the settlement. The question on was where does the settlement take place? So our model is the settlement is taking place on the blockchain, but it's not visible, right? So it's cryptographically signed, and nobody else can see it except for the two parties. But that's where you have to get comfortable with the fact that it's outside your firewall. It's not held in your system; it's held somewhere else.
Yeah, I've got a question to help you maybe with your disruption.
Thank you.
Both of you, I think, were making the point that it's still the banks with their brands and the liquidity that will be running most of those transactions. And I'm just wondering, if you read any branding or trust survey, banks are pretty much at the bottom of the pile, and they haven't recovered really since the recession. And they're my clients, so there's nothing personal here. But when you really look at brands that folks trust, especially the Gen X, and after it's Apple. So for example, iTunes already has over 1 billion subscribers. They've done the KYC on them. They've got all the details. So my question is, how can those big e-commerce players use this platform to truly disrupt the payments players that we currently see? Because they're the ones who have the trust. So
this is happening.
Yeah.
I mean, this is what Facebook is doing, and I mean, there are any number of companies that have designs on this. The prior iteration of this, by the way, were all the cell phone companies 15 years ago that challenged almost state by state their ability to actually do billing services and then ultimately extend banking to you because of all the data they have. At least in the US, the lobbying forces at work here are not for the faint of heart. It may happen, but it's not likely to happen overnight or even in 2 or 3 years. I actually think that kind of competition is quite healthy. And you're absolutely right on bank brands. I mean, all of us can and often do bitch about them all day long, and often for legitimate reasons. But again, it comes down to where does everybody in this room have their money? There's usually one with it under the mattress, but I don't see them today.
But I will give you an analogy that I like to think about, because I remember calling my grandmother, when I was a little kid, and she'd say, I gotta hang up because this is costing so much money for this phone call, right? Well, now it's free. And then I went to Japan. I lived in Japan for 15 years, and it went from $1 a minute to 10 cents a minute to FaceTime, right? There's so things like that, cross-border payments, the remittances, I think they're gonna move to zero over time, which is terrific, because then what can happen is we start doing a new type of payment on top of this rail where we don't have that friction. And that's where it starts getting, you want disruption, you start having, how much is my car, how much do I pay for driving this time of night, this size of car, this speed on this highway, and I pay a different amount. And that's what this new future is going to take us to, where we don't have the friction of the cross-border payment, or the payment, it doesn't even have to be cross-border payment between two entities. If that's free, then I can start doing really interesting payments.
Yeah, if they start multiplying that by your driving record, you might be less and adjust your insurance rates in real time.
Yeah, we have more questions.
Yeah, so part of the beauty of blockchain is that you can audit it, right? And you can look, technically anybody could grab the formula and you can run it through. How patentable is that formula? Because obviously Bitcoin uses probably a different crypto formula than you guys do over at Ripple, right? And how what would prevent me from starting a Ripple or any other company just based on the research that you have done on blockchain?
You can today. So Ripple has been forked. You know what fork means? So Ripple is open source. Our Ripple consensus ledger is open source. So you can, and people have, taken Ripple, created a blockchain just like Ripple, and use it. So it's free to do. The problem is it's really hard to understand everything that Ripple does and to maintain that ledger. So that's where it gets very complicated, is that there's only a small group of cryptographic experts that really can manage some of these complexities and then evolve it. And probably between our two companies, we've got quite a bit of those. So it's a very, very hard technology for you to evolve without that deep expertise.
I think it's also important to remember that this was very much born out of an academic setting. And there's still quite a bit of like cryptographic research, which is up and coming and very much at the forefront. Blissfully, though, we all benefit from the fact that there's a tradition of open source software and exchange, and people tend to rely on these systems because they're proven through time. So it's important to note that like part of the reason people trust open source systems is because everyone uses them and they're tested. So yes, you could patent it, you could make that your secret sauce, but it would sort of betray a spirit that's not really in line with the rest of the community.
So maybe a question for you, Tiffany, just to piggyback on that. When internally, you're the only bank here, what is the key challenges that you're facing when you go inside the bank and say, we need to do something about this, we need to bring that technology into our own innovation labs and businesses? What is the challenge that you're facing on a day-to-day basis?
Well, fortunately, actually, I think we just announced this at Investor Day, but we have been making some pretty significant investments in this technology because we think it's going to be so important and transformative for the bank. So we actually have a group called the Blockchain Center of Excellence, which is basically like a mini development shop focused on blockchain technology that sits in our corporate investment bank. And obviously, you probably work with my colleagues at the Blockchain Center of Excellence a lot.
It's funny because you say like, oh, it's mini, but I'm like, wow, that would be really big for us. But like, I guess at JP Morgan Chase, like 50 people is probably,
It is mini.
Exactly. Like that's huge. That's our whole company.
No, and it wasn't 50 people right when we started it. It grew overnight, and I think that's also part of the story is that. It started as a smaller investment in a smaller team, and over time, similar probably to blockchain itself, right? It was untested. We proved something. It grew. We decided we would invest in it to try and make it scale. And I think that's sort of the same story you're seeing with blockchain as a whole. But I think, again, one of the biggest problems, even with that group, when we go out and do a proof of concept or we talk to a different line of business in the bank and we say, hey, we think this would be a good use case for this technology. It's the fact that it is untested. No one knows if it will scale. No one knows how it will integrate into all of the current systems, which at most banks are they're really pieced together with, string and wire because they're legacy systems that have just been updated on an ad hoc basis to kind of like get the bank through whatever it needs to get through. Or in the case of JP Morgan, perhaps there are a couple different bank systems pieced together. So that's one of the bigger challenges out there.
But it's also the part that's really exciting. We're year 3 of a 20-year journey. So this is something that's going to keep all of us quite busy. It's applying the technology. It's not constantly inventing. It's really applying it to the financial services, to healthcare, to everything.
Yes, question.
In terms of applying the technology, it seems that because maybe the blockchain makes the world kind of flat, you can move money from China to Australia or to wherever. It kind of reminds me of the village where the power lines are going overhead, but the village has no power. So, do you see any approaches that might have kind of a societal disruption where a market or a region is saturated with your service, where Ripple is in every bank, in every MFI, every money transfer operator in the Caribbean or in some other part of the world?
Everywhere.
And what would the effect be, you think, of that versus this sort of more diffuse interconnectivity between larger institutions.
Yeah, well, even Ripple thinks that it will be diffuse. So even though we love the idea that everybody uses Ripple, it'll be diffuse. But what's really cool about the blockchain, and you go to those types of use cases, where we go to third world countries or less fortunate areas, that you look at what happens after a disaster and how much money gets lost along the way as we transfer the money to the aid agency and then to the country and then to the villager. What's nice about blockchain is I can follow that transaction all the way through. I can also make it a point-to-point. So if I want to give money to someone in a less fortunate country, I can make that payment directly to that person. And if it doesn't go through, I stop the payment.
But I guess my question is, what if what if somebody wants to sell oranges across the border?
Yeah.
And it's not a developed world to developing nation situation, but it's just normal commerce that normally is conducted in cash. Is there any way that, is there any sort of approach that might capture that by, again, saturating, having a sort of societal change?
A barter system, or what's your image?
No, just that if you have resources available in more than one place next to each other, we tend to think of us and them, and we're going to give money, and we're going to be able to trace it to make sure it doesn't get lost. But there's a tremendous amount of activity that takes place in a lot of the world that's cash, and that is cross-border, and there are markets that sort of ignore political boundaries. So I'm just wondering if any of you have thought of the effects of this type of technology in a more saturated, geographically saturated region.
Yeah. Well, we're moving towards a very mobile world where everybody will have a mobile phone. That's the area that most people think you'll receive your payment on a phone.
So, yeah, we have a number of companies that are doing different aspects of it. Is when you asked your question, my immediate mental image, and although more of ours have been working in Central and South America, but was Africa, and I was imagining these flyover countries instead of states. I've got London and I've got Joburg, and they're transferring all kinds of bits and lots of value, and and it's becoming much more efficient. And yeah, there's some bad actors in there that folks are on the hunt for, but in general, everything they're flying over with a satellite hop are not really being touched. Was that kind of? Yeah. So. You're right. I mean, what's interesting, and I've been to the M-Basis system in Kenya. What's interesting is you find folks there with mobile phones and with a solar cell that allows them to top up or charge, who don't actually have running water or electricity where they are. But the solar cell is used maybe for a light bulb and to charge the phone. So, and they're able to participate. Now, some of those countries may have regimes that are, let's just say we might not want to live under them, and there are actually many that one can think of around the world in different places. So this is the currency question to an extent. If I have a certain amount of value, now it may be minutes on my phone, which are fungible in Kenya and other places, and that will increasingly be the case. But I'm still localized unless I can tap in. And the reality is you can tap in if the Ivory Coast government or the Nigerian government decides, we're not going to allow a ground station or we're not going to allow an uplink, you can have one across the border. And if you don't like that, well, there are a bunch of people launching nano satellites, and there are a few dozen in the sky today, and there will be thousands of them within 2 or 3 years that will provide broadband to most corners of the earth. Maybe you have to go to Antarctica to get some peace, but other than that, it's going to be harder and harder. Said another way, third world people under oppressed regimes have the ability, or will increasingly have the ability, not overnight, to tap into networks, to tap into lending environments, to move their whatever store of value they have, maybe not if it's sacks of grain, but as long as it's digitizable, out to not be subject to the whims of the local currency. There are 83 currencies in the world, and most of them aren't very good. So there are a lot of societal impacts, and we do actually think a lot about those. It's hard to pick how you invest in those unless you pick use cases.
If you wanted to add something, yeah.
Yeah, I mean, in Argentina right now, there's a big push towards Bitcoin. Well, why is that the case? Well, President Kirchner imposed a fixed exchange rate, 10-to-1, with the dollar and the peso. And so there's a few ways that you can capture value if you don't want to abide by this totally arbitrary rate. One of them is to go down a dark road in Buenos Aires and to negotiate for the blue rate. It's entertaining, but perhaps not the best idea. Another way is to just sell your Bitcoin. And so it's basically evading capital controls and evading these sort of crazy, monetary rules that are imposed by folks who may not always have the best interest at heart, is one thing that Bitcoin happens to be very good at. And you can tap into a very liquid currency market through that as well, using it as an alternative. In Zimbabwe, when there was hyperinflation, people adopted the dollar. So this is just kind of a reliable store of value, much like that.
Otherwise, you have to
one
print.
More question. Yeah, go ahead, Jim. Sorry.
No, I was going to say, otherwise you have to print the $1 trillion bill, as they did.
But I have many. They're a good novelty item. Yeah.
One more question. Yes.
So I'm going to go back to the KYC question. The answer to the KYC question seemed to be more Bitcoin-ish. Right? I looked at that question about KYC saying, I think blockchain, and I just want to try this, could be a good technology to help somebody validate a person is who they say they are. Right? So blockchain versus Bitcoin could be a technology utilized to deliver KYC solutions, whereas Bitcoin is almost the opposite. It's a solution kind of created to get around KYC.
Well, Bitcoin is a use case for the blockchain, not the other way around. So one use case of the blockchain is to have a currency that is digital, that uses a blockchain topology in order to do the counting. And in the case of Bitcoin, it actually also does the mining, and it creates a bunch of second and third order issues around the integrity or lack thereof of some of those parts of the system. And some of the use cases obviously are perhaps not on the spectrum, on the negative spectrum as opposed to the positive. There are many that are on the positive. But blockchains themselves are distributed databases that all synchronize instantaneously, well, not really instantaneously, but we'll go with that, into one 12-nines accepted version of the final block or the last block that's gotten written. So you could put identity on there, which involves KYC. You could certainly have many aspects of what we call KYC, which varies, your mileage varies on that in terms of where you are. And if it's more centralized, you actually can say that the domiciled location of wherever the central stack is the resident rule of law. You can't do that in a fully decentralized topology, right? Because it's either everywhere. This is the Amazon problem of taxation, right? Or all the gambling sites since there's been an internet, or it's nowhere. And that's a debate. That's a debate that you can have. But when you think of Bitcoin, capital B versus lower b, but think of it as a use case, because that's really what it is. And it may actually be more important, and I would argue in the short term will be more important in secondary and tertiary markets than whether or not you pay for it at Safeway anytime soon.
All right, final question.
So my question relates to actually the cost structure involved in managing blockchain. I'm very interested in micropayments. Both we had a prior panel on financial inclusion and the opportunity to miniaturize payments to enable activities such as those you were starting to discuss. But I've been recently reading about the not so fast. There's actually hidden costs, and we don't really know what the underlying processing and management of this capability on the longer term. Because I've been was fascinated by the idea that it almost could alter the cost structure of current payments universe, which has a lot of fixed costs that are quite difficult to alter and based on the business models of some of our giants. How do you see that playing out in terms of the opportunity to expand the use and access to payments in new use cases? And what do you really think is the sort of cost model for micropayments?
So micropayments was kind of my initial thesis when I looked at digital currencies 15, 20 years ago. That's why I started. I actually didn't come at it from any other perspective, and there was not any discussion about much of what we talked about here today. It was specifically trying to solve a problem that the internet allowed us to try to solve in a meaningful way for the first time. And actually, everyone in this room has gotten, when they've searched for sites on Google or Bing or whatever you use, the 404 era, site not found, you pop up in that. So 402 is payment required. The internet's basic structure expected and was built to have a payment stream, and the expectation was it would be micropayments. Now, there are a bunch of reasons why it didn't work then, not the least of which is the first industries to be disrupted by the Internet of Information and Entertainment, which is what we all sort of see on our screens, were things like publishing and media. And these were the low-hanging fruit, completely unregulated, easy to slice and dice. But they couldn't get it down to the fractional level, right? To that layer where, you're buying an article for 5 cents or 15 cents or whatever it is, as opposed to having a paywall or a subscription or some sort of one-time charge. And the reason for that is that, well, at the then time, PayPal was 400 basis points and the cards in your pocket and your wallets and your purses were 250. Today, PayPal is about 290 basis points on average, and the cards in your wallets and purses are about 250, maybe 2.25. So not a lot of progress there. The interchange network that we know of and that we use cannot the 3 database pings that happen with every transaction, you can't do that with the cost structure implied. So it is true that you cannot use the existing rails to process 5-cent transactions. But it is also true that there are far more things in the world that want to be sold for 1 penny or 5 cents or 15 cents, or including a lot that want to be sold for 1/1000th of a penny that you won't even think about, like stop sending me spam and many other use cases that sort of go away with this kind of thing. But you're not going to run it on the existing system. So these systems do have to be built. There is the question of who owns the costs of that. Are they societal costs? Are they bank costs? Who wants the transaction volume when it's free? Well, not most of the processors. But a lot of their ability to happen now is bypassed, so they actually don't need to use the existing rails because they're working over TCP/IP. So yes, there is a legitimate cost argument, particularly if you're running an extant system that's doing a lot of processing today, and it hurts you, by the way, to fractionalize this. But no, you don't have to run through those rails.
All right. I think that was the last question. I want to thank you, everybody in the room. I want to thank our audience around the world on webcast. And of course, thank you, James, Steve, Kathleen, and Tiffany. Thank you very much for being with us tonight.
And I'd like to add my thanks to Eric. Great job running the panel. All the panelists, we're kind of in awe of the brain power up here. So you're welcome to hang around. I think we can stay here till 8:30 so we can do more networking. And again, I remind you, our next event, Tuesday, May 3rd on EMV. Okay, thank you.